Imagine putting your money in a bank, and instead of earning 0.01%, it quietly grows while you sleep. Most Americans still keep their savings in accounts that pay almost nothing. But in 2026, some banks are paying 40–50x more interest. The question is, are you using the right one? Because the difference between the wrong account and the right one could mean thousands of dollars over time. Quick question: if your bank suddenly stopped paying interest tomorrow, would you even notice? Most people wouldn't, and that's the problem. What is a high-yield savings account? A high-yield savings account, HYSA, is simply a savings account that pays significantly more interest than traditional banks. For example, traditional banks might offer around 0.01% APY, but many online banks in 2026 offer 4 to 5% APY or more. That means your money grows faster without investing in stocks or taking risk. Think of it as the lazy way to grow your savings. But here's something most people don't realize. Not all high-yield accounts are equal. Some banks offer great rates, but hide fees, limits, or bad withdrawal rules. So choosing the right one actually matters. Examples of popular U.S. HYSAs. Here are some of the types of banks Americans often use for high-yield savings. Online banks like Ally Bank, SoFi, Capital One, Marcus by Goldman Sachs. These banks often offer much higher interest rates because they don't have expensive physical branches. That allows them to pass the savings to customers. But wait, higher interest is great, but rate alone should never be the only thing you check. Because the real question is, how easy is it to actually use the account? What to look for in a HYSA? When choosing a high-yield savings account, look for these 5 things. 1. High APY. The higher the annual percentage yield, the faster your savings grow. 2. No monthly fees. Some banks charge maintenance fees that eat into your interest. 3. FDIC insurance. Make sure the bank is insured by the Federal Deposit Insurance Corporation. This protects deposits up to $250,000. 4. Easy transfers. You should be able to move money easily between accounts. 5. Strong mobile app, because most HYSAs are online. Now, here's the mistake a lot of people make. They think a high-yield savings account will make them rich. It won't. But it protects your money from inflation and helps it grow safely. And that's exactly what savings should do. Realistic example. Let's say you keep $10,000 in savings. If your bank pays 0.01% interest, you earn about $1 per year. Yes, literally $1. But with a 4.5% high-yield account, that same $10,000 earns about $450 per year. And that's without investing or risking your money. Now imagine this. Your emergency fund sits in your account anyway. So the real question becomes, why not let it earn more while it's there? When to use a HYSA? High-yield savings accounts are perfect for emergency funds, short-term savings, travel funds, down payments, financial safety nets. But they are not meant for long-term investing. For long-term wealth, you usually want investments like index funds or ETFs. If you're building financial stability, a high-yield savings account is one of the simplest upgrades you can make today. It's safe, it's easy, and it lets your money work a little harder for you. If you want more simple explanations about money, investing, and financial freedom, subscribe to FreeMan, because understanding money is the first step to becoming financially free. Thank you for watching, and see you in the next video. Bye-bye.